Bismillahirrahmanirrahim. This is in continuation to my earlier video on theoretical concept of the cash flow statement. Now I am showing a practical working on the cash flow statement, how to present the cash flow statement. In front of you, you are looking at data showing the balance sheet items and certain additional information making an illustration. Now we come to the working on it, certain schedule making. Here is the working. First of all, we have worked out the depreciation charge during the year on the fixed assets. Net book value of equipment beginning of the year was 243 million, which is shown on the example as here. What was the additional acquired during the year? 35 million. We go to the example and find that how 35 comes. This 15 million plus 20 million. These two figures adding up come to 35 million. Now it is come to 278 million. End of the year equipment cost was 274 million, which is shown here. This is 274 million. When we reduce it, the difference comes to the depreciation for the year. This is 4 million. Now come to the how increase of inventories is calculated. Inventories at end of the period was 100 million. Now go to the example. This is the 100 million. Less acquired from an other enterprise 50 million. Other price was this was 50 million. Net come to 50 million. Less inventories at the beginning of the year was 120 million, and 120 million is showing here. Decrease in inventories during the year is 70 million. Now the calculation of income tax. Provision of the year for income tax was 50 million, which is shown here. Add tax expense for the year, which is showing here. Tax total come to 60 million. Less provision end of the year was 53 million. 53 million is showing here. Income tax paid during the year was 7 million. This is the difference between 60 minus 53 come to 7 million. Now how to calculate the net profit before tax? Because in this example, no proper profit and loss account is given. Now we will go on reverse calculation. Now there is shown an unappropriated for the end of the year was 40 million. End of the year was 40 million. This was the figure. Now add dividend paid. Dividend always is paid out of profit. So it is a part of profit. This was the figure provided in the example was this. Total come to 60 million. Less unappropriated profit earning beginning of the year was 37 million. This was the figure this showing in the example. So Net profit after tax come to 23 million. 60 million minus 37 million comes to 23 million. And before tax, how it is calculated? Before tax is 23 million here, and add back the tax paid 10 million. Net profit before tax come to 33 million. Then profit tax paid is showing an example is here. So now we come to decrease in trade payable. Trade payable end of the year was 47 million, which was shown here. And trade payable card included in this 47 million, 5 million, which is showing in the example here, 5 million. Net come to 42 million. Trade payable at beginning of the year was 140 million, which is showing here. This decrease in trade payable come to 98 million. This is the difference between 42 and 140 million. Now we have made schedule working above, and now come to the solution of the cash flow, how to present it. We have calculated net profit before tax 33 million as above here. Depreciation was calculated above was 4 million. This is a non-cash item and always included add back. Operating profit before working capital come to 37 million. Decrease in trade receivable 50 million. 50 million, you go to the example figures, how it comes. It is the difference between these two figures. 50 million. Decrease in inventories come to 70 million. Working is given as above here. 70 million. And decrease in trade payable is 98 million, which is calculated above here. So net cash used in operating activities come to 59 million. This is the sum total of all these. Income tax paid was 7 million as calculated above. Net cash from operating activities come to 52 million. Net cash flow from investing activities. Purchase of equipment 15 million, which is showing in the example. This was 15 million. And acquisition assets of liabilities of other company 15 million, which is shown here. Net cash used in investing activities come to 30 million. Cash from financing activities, dividend paid 20 million. Financing activities in this example only one item is showing. This is the inventory, this is the 20 million. Dividend paid. Now net increase in cash and cash equivalent come to 2 million. Which is net total of this 52 million, 30 million, 20 million. Net total of is 2 million. Cash and cash equivalent at beginning of the year was 4 million as shown in the example. This is the 4 million. And cash and cash equivalent at the end of the year was 6 million, which is reconciled and as shown in the example, this is the figure 6 million. Now the cash flow statement is duly reconciled and calculated. Hopefully this will help you to understand how to present and prepare the cash flow statement. It was a simple calculation, it was a simple example. In the next time I will give you to prepare how to prepare and present the cash flow statement in detail working by providing their profit and loss account, their balance sheets, their schedules, and in detail, inshallah. Okay, thank you very much.